Hey everyone, what's up OG gang? The markets are closed right now. You have exactly 48 hours. And what happens when silver starts trading again Monday morning could tell us if we just saw the lowest point of the biggest and scariest price drop in 6 years, or if prices are about to fall even more to levels most people think could never happen. I'm going to walk you through exactly what went down this week, show you the 3 price numbers that will decide everything on Monday. And then I'm going to share something about the data on who's buying and selling that should scare the big banks and get excited everyone who really gets what's going on in the real silver market. But first, let me paint the picture of the total craziness we all just lived through. Thursday, February 12th. Silver starts trading in Asia, and it's already being pushed down. Then Europe makes the selling even worse. Then the US jobs numbers come out. 130,000 jobs were added when people only expected 70,000. And silver doesn't just go down a little, it crashes super hard, dropping 10% in just one day, going from $86 all the way down to $76. This was the third worst single-day drop for silver since COVID. The only worst days were the crazy scary crash in January, when silver fell 36% in a single day, which was the worst day ever in silver's history, and the first big COVID panic back in March 2020. But here's what makes Thursday totally different from those other times. This wasn't because of some big world event. This wasn't because the Fed surprised anyone. This was a forced selling situation, caused by margin hikes that happened exactly 24 hours before the most good news about inflation we'd seen in months. The CME, which is basically the big official place where silver is traded, had just raised how much money traders need to have to play the game, going from 15% to 18%. A trading company called Owanda Japan cut how much trading their customers could do by 70%. The whole system was basically squeezing out people who were borrowing money to bet on silver going up. And they picked the perfect moment to do it, right before news came out that would send silver shooting back up, because Friday morning at 8:30 a.m. Eastern Time, the January inflation report dropped. The headline inflation number came in at 2.4%. People expected 2.5%. The number before was 2.7%. This is the lowest main inflation reading we've seen since May 2025. The core inflation number came in at 2.5%, the lowest since early 2021. The market started thinking the Fed would cut interest rates, the dollar got weaker, and silver shot up 5.5% from Thursday's lows and closed Friday around $78. So in just 48 hours, we saw a $10 crash and then a $5 bounce back up. That's a $15 swing, almost 20% craziness in just 2 days. And now here we are on Saturday, markets closed, asking the only question that really matters. What happens Monday? I'm going to give you 3 price numbers. Write these down. Screenshot this because one of these 3 numbers is going to get tested Monday, and how silver reacts will tell you everything you need to know about where things are going next. Number 1. $75 support. This is the line in the sand. If silver drops below $75 on Monday and stays below it, not just a quick dip, but actually closes below $75, then we're probably going to test the $70 level. That's where the first big support from the early February drop sits. Below $70, you're looking at the 200-day moving average, which is around $55. Now, I don't think we're going all the way to $55. The real-world reasons to own silver don't support that. The physical silver market won't let it happen. But if Monday starts off weak and we break below $75, the traders who follow charts will jump in and sell. The computer trading programs will kick in automatically, and we could see a rush down to $70 before buyers step in to stop it. What to watch? If we're at $75 in the first 30 minutes of trading, watch how much trading is happening. Lots of trading at $75 means it's a real breakdown. Very little trading means it's a fake out and prices will probably bounce back up. Number 2. $78 consolidation zone. This is where prices closed on Friday. And here's what's interesting. $78 is almost exactly where the fight is happening between the people betting prices go up and the people betting they go down. We've got the 50-day exponential moving average sitting at $80, which is a huge wall of resistance. We've got support from the Friday bounce between $76 and $77. If silver opens Monday and just trades sideways between $76 and $80 all day, that's actually a good sign for the bulls. Why? Because it means the people who bought on Friday are still holding on. It means the selling wore itself out on Thursday. It means a base is being built. When prices calm down after a violent move, that's how you build the foundation for the next big move up. If Monday is boring, if we just bounce around $78 without much wild swinging, that's the best possible outcome for people hoping prices go higher. What to watch? How tight the range is. If we're stuck between $77 and $79 with less and less trading happening, that's like a spring being coiled up tight. Something big is coming next week. Number 3, $80 breakout. This is the big one that changes everything. The 50-day EMA sits at $80. That's not just a chart number. It's like a psychological fortress in people's heads. If silver opens Monday and gets back above $80, especially if it does it with lots of trading in the first hour, then Thursday's crash was just a trap to shake out the weak hands, a final big flush before the next big move up. Above $80, the next wall is $83. Above $83, we're looking at $86 to $88, which is where we were before Thursday's bloodbath. And if we get back above $90, then everything that happened this week was just noise, and we're back on track toward $100. What to watch? The first 30 minutes. If silver opens at $78 and quickly pushes to $80 with lots of volume, that's the big smart money institutions buying. That's the smart money saying the bottom is in. If it slowly grinds up to $80 over several hours, that's just people who bet on prices falling, buying back to close their positions. Less exciting, but still a good sign. Now let me show you why Monday matters so much. Because it's not just about the chart levels, it's about who is on the other side of the trade right now. The latest report that shows us what big players are doing, with data as of February 3rd before this week's craziness, showed something totally extraordinary. The number of bets from regular speculative traders on silver going up were slashed by 38%, bringing them to the lowest level in 23 months. The big money hedge funds and speculative players held just 4,900 contracts betting on silver going up. They were almost betting that prices would go down. These are the hedge funds, the momentum traders, the people who pile in when silver is screaming higher and run away when it crashes. They're gone now. The bets on gold going up were cut 23%, to the lowest level since October. The total number of open contracts collapsed by nearly 79,000 in a single week. Do you understand what this means? The weak hands have been flushed out. The borrowed money has been removed. The positioning is no longer crowded. We've gone from one of the most stretched out, super excited, everybody and their mom is long situations in January, to a market where the speculative players have been systematically destroyed. And here's the thing about this positioning data. When everyone who is going to sell has already sold, when the speculative players are washed out, when the data shows you there's nobody left to panic sell, that's when the bottom forms. Not at the perfect chart level, not when the chart looks pretty, but when the people are gone. That's right now. Let me connect the dots for you because the timing of Thursday's crash is not a coincidence. The CME raises margin requirements. Owanda cuts trading limits. The employment data comes out slightly stronger than expected. Not a disaster, just a little better than people thought. And silver drops 10% in a day. Then less than 24 hours later, CPI comes in better than expected. Inflation is cooling down, rate cuts are back on the table, and silver bounces back 5.5%. If you're a major bank holding massive bets on silver going down, and you know the inflation data is coming Friday, what do you do Thursday? You don't let silver sit at $86 going into good inflation news. You create a reason for it to crash. You raise margins. You trigger the computer programs. You force the week longs out. Then when the good news hits Friday, you're buying back your short bets at $76 to $78 instead of $86 to $90. This is not a crazy theory. This is what the data shows. This is what happened. And the fact that silver bounced so hard on Friday, recovering half the Thursday losses in one session, tells you the physical buyers were waiting for this. They wanted lower prices. They got them Thursday, and they showed up to buy on Friday. But here's the part that should have you on the edge of your seat going into Monday. March silver futures are 2 weeks away from a major delivery month, and they currently have open interest representing over 400 million ounces of theoretical delivery obligations. The COMEX registered category, which is the silver that's actually available to be delivered, sits around 100 million ounces. That's down over 70% from the 2021 highs. You're looking at a 4-to-1 ratio of paper promises to physical metal in the registered category alone. And if you look at total open interest across all contracts versus total COMEX inventories, you're at 500-to-1. Now most contracts don't actually end in delivery. Most roll forward or settle in cash. We all know this, but here's what's different right now. Silver is in backwardation. That means the spot price today is higher than the futures price for later. That doesn't happen in a market where there's plenty of supply. That's a signal saying there's a shortage. February deliveries have already hit 2,700 contracts. That's 13.8 million ounces being taken off the COMEX. In January, we saw days where 1,624 contracts were delivered while open interest increased by 1,431 contracts, meaning new buyers were coming in specifically to demand actual physical metal. Shanghai warehouse stocks just hit 15-year lows. London deliverable silver is at record lows. China put in place export controls on January 1st that require a government license, effectively locking up 60 to 70% of the world's refined silver supply inside China's borders, and dealers are reporting they're completely sold out. Premiums on silver eagles are running 27% to 120% over spot price. So you've got a paper market that just experienced the most violent washout in years, a physical market that's screaming shortage, and March delivery notices start going out in 2 weeks. What happens Monday matters because it sets the tone for how aggressive the remaining longs are going to be in defending their positions. If Monday opens weak and breaks below $75, some of those March contracts might give up and roll forward or settle in cash. If Monday opens strong and gets back above $80, you might see new buying coming in ahead of March. The squeeze potential is real, the setup is there, and Monday's open tells us which direction the next big move is pointing. Here's my specific game plan for Monday morning. And you can use this framework whether you trade futures, buy physical silver, or just want to understand what's happening. First 15 minutes, 9:30 to 9:45 a.m. Eastern. Watch where we open compared to Friday's close. If we gap up above $79, that's bullish overnight positioning. Asia and Europe are buying. If we gap down below $77, the selling isn't done yet. If we open flat around $78, it's going to be a grind. First hour, 9:30 to 10:30 a.m. This is where the real players show their hand. Do we hold the opening level, or do we reverse? Big volume in the first hour with a move toward $80 means institutions are buying. Low volume chop means we're waiting for more data. The $80 test. If we approach $80 at any point Monday, I'm watching to see if we get rejected or if we punch through. A rejection at $80 with a red candle means we're probably going back to $75. A breakout above $80 that holds means we could run to $83 quickly. Correlation with gold. Gold closed Friday at $5,030. If gold is pushing toward $5,100 Monday and silver is lagging behind, that's a warning sign. If they're both moving together, that's healthy. If silver is outperforming gold, that's when you know the real move is starting. The bigger picture setup. Look zooming out for a second, because you can get lost in the day-to-day price swings and miss what's actually happening here. Silver has nearly tripled from the lows. We went from $28 to a high of $95 in January. We've now corrected back to $78. That's a 40% drop from the highs. Is that a lot? Yes. Is it normal in a silver bull market? Absolutely. In 2010 to 2011, silver went from $18 to $49. Along the way, it had a 30% correction. Then it made new highs. In 1979 to 1980, silver had multiple 25 to 35% corrections on the way to $50. Violent corrections are just how silver moves. This isn't stocks. This isn't bonds. This is the most volatile major asset on the whole planet. And if you can't handle 40% drawdowns, you shouldn't be in silver in the first place. But here's what hasn't changed. Central banks are still buying gold at record pace. 850 plus tons expected this year. The dollar is still down 9% year over year with more rate cuts priced in. Silver is still in its 6th consecutive year of supply deficit. COMEX vaults are still draining. China is still restricting exports. Physical premiums are still exploding. None of the big structural reasons to be bullish have changed. Only the price has changed. And the price just gave us the biggest washout in positioning data in years. That's the setup. That's why Monday matters, because we're either going to confirm that the bottom is in and start building the next leg up, or we're going to see one more flush that takes us to $70 to $75 before the real buying starts. What happens next? Here's what I think. And this is just my read of the data. You make your own decisions. But here's what I think happens. Monday opens somewhere between $76 to $80. We chop around for the first hour as the market digests the weekend and waits for more information. By Tuesday or Wednesday, we're going to get the FOMC meeting minutes released. If the minutes show the Fed is worried about the economy, if GDP is weak, then we're going straight through $80 and heading back toward $85 to $90 within a week or two. If the data is hawkish, if the Fed is still worried about inflation, if the economy is stronger than expected, then we might retest $75 before finding a bottom. But either way, the March delivery period is going to be fascinating, because if you're betting on silver going down right now, and you see delivery notices starting to pile up, and you know the vaults are at multi-year lows, and you know China locked down exports, and you know the physical market is in backwardation, how confident are you that you can cover your bets at these prices? That's the question the banks are asking themselves this weekend, and Monday's price action is going to give us the first hint at their answer. Final thoughts. Look, I know this week was brutal. If you bought silver at $90, you're down. If you bought at $85, you're down. I get it. The volatility is insane. The manipulation is real. The frustration is totally valid. But you need to understand something. This washout was necessary. The market was too crowded. Too many tourists. Too much borrowed money, too much excitement. Now the tourists are gone. The borrowed money is out. The positioning is clean. And the physical buyers, the central banks, the industrial users, the people who actually need real physical metal, they're still here. Monday is just one day, but it's the first day of the next chapter. And you're going to want to watch those 3 levels like a hawk. $75, breakdown territory. $78, consolidation zone. $80, breakout level. One of them is getting tested Monday. And how we react tells you everything about where we're going next. Stay sharp, watch the levels, and remember, the best buying opportunities in silver have always come after the most violent sell-offs. This might just be one of them. See you Monday.